In this video, I'm going to show you guys my step-by-step strategy on how I'm making 1% per day in passive income by yield farming or providing liquidity for the Tibbir token. All right, so if this is your first time to the channel, in this video, I'm going to cover briefly what yield farming is. I'm going to cover briefly what Tibbir is, and I say briefly because I just released a full fundamental analysis on Tibbir, why I think it can 10 to 50x this year. Laid out literally everything you need to know. The team behind it, the money behind it, the problem that they're solving, the tokenomics, the social media, literally everything. So I'm just going to give you the high level. Per usual, none of this is ever financial advice. These are my own perspectives, research, and opinions, and should be treated as such. So without further ado, let's jump straight into the video, starting off with what is Tibbir? So the Tibbir project is aiming to aggregate everything that you use for identity into one place so that once you're going to sign up for bank accounts, exchange accounts, any kind of financial accounts that does traditional KYC, that it can all be in what they call a digital backpack so that you can sign up for these different accounts with the click of a button in 95% less time versus having to send out these PDFs, fill out all of these forms, do all of this stuff. Today, banks burn over $100 million on KYC compliance with little to show for it. So Tibbir is aiming to make identity an asset instead of a cost. So they'll allow reusable ID credentials that banks and fintech companies can use and get paid every time another institution verifies them. This project is backed by Ribbit Capital. I proved that in my video as the founder, Mickey Malka, who's managing $12 billion in assets. His 7-year-old Ethereum wallet initially funded this project. And his venture capital firm, Ribbit Capital, Tibbir is Ribbit spelled backwards, right? Coincidence? I think not. They've invested into a lot of companies that can help bring this to life, such as Coinbase, such as Credit Karma, such as Robinhood, such as Revolut. Definitely give that video a watch, and I went through his portfolio companies and how all this stuff ties together. But their portfolio has 30 plus companies around this shared identity network, and venture capitalists typically like to have all of the portfolio companies that they invest in work together if they can, because it makes them all more valuable. Okay, so identity, since their inception, has been their niche, and it's a huge problem, and it's been a problem for a long time. Now, what is yield farming? So yield farming is just the act of providing liquidity on a decentralized platform to help facilitate that liquidity, whether it be borrowing and lending, staking, to secure a blockchain's network, facilitate insurance premiums, or the most profitable way, the way we're talking about in this video and the way we usually talk about on this channel, is staking your funds on decentralized exchanges so that you can get paid passively whenever people swap back and forth inside of the pool that you're providing liquidity on. So for example, if you want to make passive income in Ethereum and USDC, you can go on Uniswap, enter into an ETH USDC position. You can determine the price range whereby you want your liquidity to be used for. So let's say 2,000 to 4K. Anytime ETH is between 2 to 4K and people are selling ETH for USDC or USDC to ETH in your pool, you're making passive income. The amount of money you're able to make is dependent on volume and TVL, which is called the volume to TVL ratio. So you want to find pools, which this one is really good in that one, with a good volume to TVL ratio, meaning the volume is much higher than the TVL, which means you have more food and less mouths to feed. If it was flipped the other way and you have a TVL that's bigger than the volume, now you have more mouths to feed with less food, right? The mouths are the liquidity providers, the food is the yields. Hopefully that makes sense. So of all the pairs out there, and if I already made a video on me buying Tibbir, why am I providing liquidity for it? Well, providing liquidity is like selling shovels during a gold rush. You're providing a service. It's different from trading, right? And remember, during the gold rush, the people who were selling shovels made more money sometimes than the people who were selling the gold. But it's dependent upon how much gold is needing to be dug up. Because if it's tons and tons of gold, hey, your shovel's going to break. You're going to need to buy new shovels. You're going to need to hire more people. All those people need a shovel. So you're going to make more. So if I have a project that I think is going to be bought up heavily, then I want to make the fees from that. And in this project's case, and I'm going to make a take profit strategy video pretty soon. Hit a like if you want me to do that. I think this project can reach a market cap of multiple billions. Right now it's at, last time I checked, 96 million. So from 96 million to a couple billion, that is a lot of buying, right? And anytime there's a transaction, there are fees associated with that. And again, this project is not on major centralized exchanges. yet. And remember, I said that Mickey Malka invested early in Coinbase and in Robinhood. So I wouldn't be surprised if this token got listed on the major exchanges, and that's just going to send it to the roof because it's going to increase liquidity. The more liquidity you have, the more institutional and larger investors can get in and out without having to worry about slippage. But until then, most of the trading is happening on the DEX, on the decentralized exchange. So the people who are providing the liquidity on the decentralized exchanges are making the fees. And I want to be one of them, and I want you to be one of them too, just as long as you're doing your research and you know what you're doing. Going back to the selling shovels during a gold rush analogy, you want to have your shovels built and your shovel shop set up before the gold miners come in, right? If you know that it's gold underground, are you going to wait until the people are already there to start selling shovels? No, because they probably already bought shovels from someone else. You want to go set up shop so that once they come, you already have your shovels ready. So in this case, if I know this project's going to get bought up a lot in the future and the yields are paying pretty great right now, I want to set up now so I can be ready. I don't have to wake up in the middle of the night and go and check our yield hunter tool and see, oh, the APY is 1,000%. Like, no, I already want to be in my position, okay? So now your next question, well, what about impermanent loss? Like, if this thing's going to do so well, what can I pair it with so that I'm always in range? Well, I already have my HODL bag, okay? I already have a nice bag of Tibber that I have price targets set up to where I know exactly when I'm going to get out, exactly when I'm going to sell, and I know what dips I'm going to buy. So that part of my portfolio is separate. It is together, but it's separate. I manage my portfolio like a market maker. And if you look at market makers like Citadel and Goldman Sachs, Morgan Stanley, they don't use all of their capital for market making. They split it into 3 different tranches. They have an asset tranche where they'll have stocks and bonds and crypto or whatever. They'll have cash, and then they'll have the other portion of their portfolio is used for market making. And each 3 of these have their own time when they shine, right? So that way you can always be doing something no matter what the market condition is. Cash shines when price is cheap, so you can deploy it and get good assets at a discount. Assets shine when prices are high. You can sell it for more cash, and you have more cash to deploy when prices are cheap. That's how you stay in the game. And then market making is unique, right? Normally market making is for mainstream institutions. For the first time in the world, everyday people like you and I can become market makers since the launch of these decentralized exchanges. It's actually very huge, very historical, and the institutions can't provide liquidity or do market making in DeFi yet, right? So this is the golden era of DeFi. But getting back to my example, market making shines actually all the time. This portion of my portfolio is I only care about cash flow. And this is biblical. I made a video on yield farming's biblical significance. Definitely give that a watch if you haven't. But I only care about cash flow with my market making or my yield farming. That means I'm always accumulating more assets that I can either sell for cash to deploy when prices are cheap, or I can use it to buy assets so that I have more assets to sell once prices eventually go up, assuming that I'm buying good assets, which I think I am. So I'm not worried about impermanent loss because all I care about is staying in range and that I'm consistently generating cash flow. You know, I ROI pretty quickly. And once people really start buying this thing in the near future, it's going to be more than 1% a day. So if you do it long term and you set intelligent ranges and you monitor it consistently and you only provide liquidity for 2 assets that you wouldn't mind holding on their own, because they will go out of range eventually, at least if you're farming somewhat aggressive and you don't have these extremely wide ranges, eventually impermanent loss will turn to impermanent gain and then permanent gain. So now the next question should be, what am I pairing Tibber with, and which decentralized exchange should I provide liquidity on? Like you have Uniswap, you have Arbitrum, you have all these different decentralized exchanges. How do I know which one, and how do I know which asset to pair it with? Let me show you. So first, if I go to CoinGecko, you can come down and you can see where most of the trading is happening. This is, if you're not a member and you don't have our Yield Hunter tool, but you can come and see here, you can see that most of the volume is being traded on Arbitrum, and this is Tibbir wrapped ETH, right? So 50% of the trading volume is happening here. So you see 3% happening on Uniswap Tibbir USDC, 2% happen on PancakeSwap, 35% happening on the centralized exchange KSEX, and then you have a good amount of trading volume happening between Tibbir and virtuals on Uniswap. And now that we looked at that, how do I know which one's paying the highest yield? without having to go to each DEX, I just go to our Yield Hunter tool. I type in Tibbir, and you can see Tibbir wrapped ETH on base is paying 404% APR. 365% APR is 1% a day, okay? Pancake swap, Tibbir wrapped ETH is paying 270, and then Tibbir USDC is 140. So which one of these do I want to get into? Well, I think the price is going to rise, and I also think ETH is going to deliver a 300 to 500% return. So I don't want to get into the USDC one unless I'm just strictly using it to take profits, and I set a high range like, 1,000% above or 500% above, but the yield's not going to be high, and the volume isn't as high here, right? 13K in volume, the liquidity is 35K, but this one you have, remember I was talking about the volume to TVL ratio, you have $307,000 in volume, but liquidity is only 83K. So the volume is much higher than the liquidity. So liquidity is getting used a lot, is basically what that means. Where on this one, some of the liquidity is not being used because the volume isn't high. And not only that, I want to combine Tibbir with wrapped ETH because it's going to be easier to stay in range since, in the bull market, I think they'll both do well. If Tibbir does a 10x, ETH does a 3 to 5x, it's going to be much easier to stay in range versus being in USDC. I don't want to be in a virtuals token, right? And if I go to this chart here, this chart shows Tibbir and wrapped ETH. So if Tibbir and wrapped ETH both go up 300%, the chart's going to be flat because neither one of them is outperforming the other. But if Tibbir goes up 10x and ETH goes up 5x, you're going to see Tibbir go up and vice versa on the downside. If this was Tibbir USDC, Tibbir is going to outperform USDC, whether if it's going up or down. It's not just going to stay the same forever. So it's going to be harder to stay in range, right? So in bull markets, I like volatile pairs, which are altcoins paired with other altcoins because they tend to perform better because they are going to rise together. Thereby it's easier to stay in range, which means you're still getting paid because you only get paid once you're in your range. So if I go over to Aerodrome, you can see I'm in the 0.25 position. I have $6,200 in there. And then I click this, you can see APR 393%. Revert says something different, but I'll just average out the two. It's still around 1% a day. If I go over to Revert Finance, you can see, what I have in there. You can see the fees. Here it says 339. I'm going to rely more on Aerodrome since it's directly from the horse's mouth. I have $38 in uncollected fees. I've only been in this position for 15 hours. I just got in this last night and I went to sleep. And you can see that it's paying out pretty good. $38 in 15 hours from a $6,000 principal is pretty fantastic. You're not going to get those kind of returns anywhere else passively, unless you have access to a really good algo, but there are other risks to consider there. And if it's a good one, there's usually a barrier to entry or a fee you have to pay up front. So yield farming is the best way to make passive returns in the history of the world for the common man on a risk-adjusted basis. I'm going to keep saying it. The last thing to cover, what am I doing with my rewards? Well, with this particular pool, when I claim my rewards, I'm using half of them to buy more Tibbir so I can grow my hodl bag so I can have more to sell and make more money. And then the other half, I'm compounding and putting it back to the pool so I can keep growing this pool over time and keep increasing my yield so I can claim more and sell more. And I hope that it takes a few months for this to go up so I can keep farming this pool and just make as much money as I can, because I'm really, really confident that this token is going to at least do a 10x within the next year or this year. Okay, so now before I wrap up, if you want to get access to what my exact ranges is and when I rebalance and what I rebalance to, you want to get access to our 14-hour yield farming course, get access to our coaches, our tools such as the Yield Hunter tool that I showed here, our community. We're doing our 49 weeks to freedom challenge here pretty soon. Any of that sounds interesting to you, go ahead and click the link in the description. You have two options. One, you can book a free strategy session with me and we'll see if our program's a good fit for you. We'll get to know each other a bit. Or two, you can join our community for free, where you get access to market updates, certain videos before they hit YouTube, and other cool perks that we're going to be rolling out here pretty soon. So with that, if you got value, like, comment, subscribe, share with a friend. I'm trying to reach 3K subs on this thing. So with that, thank you so much for tuning in. I hope you got value from this. I love every single one of you who's watching right now, taking the time out of your day, and I will see you in the next video. Take care and trade safe.